This is not an easy question simply because I'm trying to think of any situation where I would have an intangible asset that is recognized as an asset for eighth schedule purposes, where it's not recognized as an asset for IFRS as well. Because, I mean, if we go and have a look at the eighth schedule and you go and have a look at the definition of asset as it's found in there, it effectively refers to, it is in para 2, it is any asset, it's movable or immovable, corporeal or incorporeal, property of whatever nature, whether movable or immovable, corporeal or incorporeal, excluding currency, but including coins mainly made from gold or platinum, and including a right or interest of whatever nature to or in such property. Okay. Now, from my point of view, okay, there's an example that's just come through. So, for example, if we're looking at a website or computer software on a cloud basis that was crafted for the taxpayer specifically, would that be an asset? Now, I would argue that yes, that would be an asset for me because it is incorporeal and it includes a right or interest of whatever nature in such property. And so if I own the IP rights to that website as well as the coding behind it, that very much would be an asset for eighth schedule purposes. Now, realistically, the costs for building that computer software would be capital in nature. Therefore, I wouldn't be able to deduct them under Section 11A. So I would have, under the eighth schedule, the website to be, yes, and there's an enduring benefit. So in terms of the eighth schedule, that payment for the development of the website, which has an ongoing benefit, because I get to keep the code and the software and all the rest, there's definitely an asset. I then go to section para 20 of the eighth schedule, and then go and say, right, my base cost would be whatever I paid to acquire that right, which would basically be my development costs or my purchase cost or however you've done the development. Absolutely an eighth schedule asset. In terms of whether there are any allowances which can be claimed against that asset, well, that's always the million rand question. Obviously, you won't be able to go to 11A because there's a capital component to it. There's an enduring benefit. So we'd have to go and look at, does this meet the criteria in terms of 11E? Does this fall under 12C, D, E, F, or any of our other specific, very built for purpose provisions, possibly even GB, GD, and GC in terms of acquisition costs of trademarks and licenses and patents and that kind of stuff. For computer software, you'd be going and looking at 11E. And yes, you can then go and claim it under 11E. I know under the old under the old interpretation note 47, they used to have a computer mainframe depreciation rate of 2 years. I know they've just gone and changed it. They've changed it when they moved to BGR 7. I looked it up the other day and now I've gone blank. I think it's 3 years now. I stand to be corrected. But yes, so then you would go and look at an allowance under 11E, but you would have to go and make sure that you meet the criteria. Okay. If there is no specific allowance, then you would be in a situation, and this is effectively what happens with leasehold improvements that are not for manufacturing and where the lessee is not required to make the improvements but chose to make the improvements. Now, in that case, I still have an asset with a base cost under para 20 of the eighth schedule, being the right of use of my leasehold improvement. and whatever I spent on the improvement is my base cost. But I have no allowances that I can claim against it because I can't go to 11F, which means that it's only when my lease then expires and I lose access, in other words, I dispose of my leasehold right, that I would get a capital loss at that point in time because I had an asset to it which I no longer have. And that's effectively how I'd be compensated, in scare quotes, for the leasehold improvement. Okay. So if I can take it a step back and bring it back to the write down on the investments, the issue here isn't that my investment in the coffee shop isn't an 8th schedule asset. It absolutely is an asset. But under South African tax law, I can't go and do anything to impact my taxable income calculation unless there's a realized loss, there's a disposal, or there's an allowance. If it's not one of those three, then that's an accounting adjustment and I ignore it. Okay. Oh, right. I'm going to give you a moment to read this one. And I actually, I actually had a office lunch earlier today, and I did a bit of a census in terms of the reactions and the responses to this questions. Please also remember, I do not edit the questions as I get them at all.